Alright, you all see the title of the video here. I put up a poll for my inner circle members, and it just so happened that they all voted for me to react to the ICT Silver Bullet video, so that's what I'm going to be doing here. And yeah, let's get into it.
Now, the framework for many ICT Silver Bullet setups are as follows, but they're not limited to: previous day high or low draw on liquidity, meaning yesterday's high, if we're bullish, there's going to be buy stops or buy side liquidity resting.
And look, he literally just, so we have 7 different types of silver bullets that could be traded. The first one right here is all you will ever need. So don't even look at these 2 to 7 right now and just look at number 1. If you just limit your trading to simply just one of these 7, that's all you need. All you need is higher time frame, narrative, confluence, and then you key in on the specific framework within the silver bullet, and boom, you're on your way. All you need is consistency, discipline, and risk management.
We would be looking for a run to previous day's high. That expansion is the draw on liquidity for buy side. Vice versa, if we are bearish, we're expecting lower prices throughout the week, and we see the previous day's low as having sell side liquidity or sell stops below. So we would look for potential setups that would expand down into that liquidity. Previous session highs and lows as draws on liquidity, meaning that, let's say you're sitting down in front of the charts and it's the AM session in New York. You would look at the high and or low of the London session that just passed and look to a run on liquidity or retest of those old lows or highs. Previous weekly high or low as a draw on liquidity. If we're bullish, we would look for a run above the previous week's high. Or if we're bearish, we would look for a run below the previous week's low. Another would be returning to a current or old new week opening gap. So that would be treated as a draw on liquidity. Or an expansion away from the current or old new week opening.
Honestly, the concept of returning to a current old new week opening gap has been something that I implement in my every single day trading. I think it's very beneficial. I think it's worth using in your trading. A lot of guys say you don't need it. Obviously, you don't. I think it's a great help in terms of referencing where fair value is for larger funds, which gives you a better chance of getting in sync with smart money. New week opening gaps are very powerful in my opinion.
And a classic ICT optimal trade entry.
The OG.
Has been for the
optimal trade entry, the OG model.
His YouTube channel. That's always been the classic flagship pattern, but now
there you go.
We've seen many more models in a purchase, so it can't be referred to as the flagship pattern anymore. I think the fair value gap is taking the throne there. Confluence of the 2022 ICT mentorship YouTube model, which I taught for free on this YouTube channel, meaning that your draw on liquidity could be...
That 2022 model created a lot of liquidity because a lot of guys trade it without really knowing what they're doing and without the proper confluence and narrative, referencing the other correlated assets and whatnot. And yeah.
A inefficiency above the marketplace when we're bullish, or a inefficiency below the price when we're bearish, which means that if we're bearish, we could be aiming for a discount, buy side balance, sell side inefficiency, or some measure of fair value gap that would be below current price action. That would be your draw when bearish. Or if you're bullish, you would be looking for a inefficiency above current price action, which would be many times in the form of a city or sell side imbalance, buy side inefficiency, or a variant of fair value gap above current price action. So you can treat that, or as I mentioned, all the previous ones above number 7 here, all of them being equally available in terms of probability if it is in the market at the time. Not all of these are a factor. There have been times where the previous week's high has already been rated that morning, and looking at it again may not be the ideal scenario. So it might require you to look at a higher time frame liquidity pool.
Exactly.
Or inefficiency above price if you're bullish. So I could list a myriad of different
scenarios. All this is, guys.
This list is
Looking for
are good
price to
enough to
draw into
give the
liquidity or inefficiency using time.
students of my YouTube channel a great deal of latitude, so that way you can look at the potential for any one of these situations. Not all of them will exist. On any given day, not all of these will be in the charts, but most
Only need
days,
one.
one of these criteria will be in play. Don't take my word for it. Go back to your price action. You'll see what I'm saying here is in fact true.
Truth.
Obviously, the main emphasis is determining the next most likely draw in the price action. So where's the price likely to go to next? That's the number one goal for all of my students, is to focus on that skill set first, because all the entries and the
Very
exits
important.
and such, that is the least important thing, because you don't know where price is trying to go to. From the time you're sitting and looking at your charts, whatever analysis concept you use is probably going to fail you.
Exactly. A lot of guys blindly
All right, let's
trading the
talk about our
concepts.
first.
A lot of guys blindly trading the concepts without being able to identify where the money is. Where is the next most likely prey? Now, he's going to be covering the London session here now. I'm going to actually skip to 12:36, I believe it was, just because it's specific to the New York session. So basically, he's just overviewing the silver bullet time, which is 3 a.m. to 4 a.m. And then we'll be also doing it here in the for the New York session. So I'm just going to skip right to New York.
With the bot point here, trading below this low, not just to the low.
I know it's up here somewhere.
This
There
one
we go.
is focusing on the 10 a.m. to 11 a.m., always New York local time. And let's take a closer look.
The best time window to trade, 10 a.m. to 11 a.m. There's not a better time window, in my opinion.
Okay, so we are looking at the E-mini S&P once more. And the idea is between 10 a.m., New York local time, and 11 a.m., we wait for when the market's bearish. Relatively cool lows. There's sell side resting.
Now, right away, without even referencing the silver bullet or the time window here, before he even says anything, what do I see? Well, I see the midnight opening here. We trade above that. That'd be our classic right here. This would be our classic London high of the day. So looking at it from a daily profile standpoint, we create an intermittent term high. So looking at it from market structure, swap the buy side liquidity over here. Shift in market structure below this swing point here. Create a fair value gap. Boom. There's your entry point. And then where is the opposing prey? Right here. Very simple. And then you implement time, 10 to 11 a.m. and boom. Everything I just said, that's all you need. You'll never need anything else. All you need is discipline, consistency, psychology, risk management. You're good.
That we have a fair value gap, bearish. Fair value gap, it trades up into it between 10 o'clock and 11 o'clock. We can sell short there. Does it offer 10 handles? Well, from 41.46 or thereabouts to 41.36, that range doesn't even get us down into this low, let alone below that one. So it obviously meets the criteria.
That's one of the better things I actually did learn from ICT in terms of being content with enough. You're knowing that there's a likely draw down here, okay? But you don't need it to get down here to, have a profitable, successful day. You can just get out right above it. You don't need it to go down there. Not every single trade is guaranteed. So partials pay. So if you're using multiple contracts, obviously take a partial somewhere down here and then leave a runner off right here. You don't need it to trade to the absolute draw on liquidity, okay? You just need to have a trade plan and stick to it.
Minimum of 10 handles. In framework, it does not mean you're trying to get 10 handles. It just means that it offers 10 handles. So going short here, collecting 5 handles, that could have been done inside of the scope of that 60-minute window. Not that you're trying to do that, as I mentioned briefly moments ago. The trade is many times held in duration longer than the window that the framework and entry
Gotta
is
have
derived
patience
from.
for it.
So it's not a in and out within the same hour. It means that you're looking for the setup to form to get you into the trade within the scope of 10 o'clock to 11 o'clock New York local time. All right,
And the PM
finally,
session.
our last ICT
The
silver
second
bullet,
best
which is
time window to trade.
framed on 2 p.m. to 3 p.m. New York local time. And this is the PM session ICT silver bullet setup. In this one here, we can see that we traded down into a higher time frame, 15-minute discount fair value gap, and you're encouraged to go into your charts to see that is in fact what we have here. Market trades down into it, shifts higher, a swing has been broken to the upside, so we have a shift in market structure and a fair value gap. So any retracements back down into that, look at the bodies staying inside that. The wicks do the damage, but the body's telling you the narrative. The story is told by the bodies. So it's telling you it's
Very
respecting this
powerful
buy
right
side
there.
sell side efficiency or fair value gap. Going into 2 o'clock, we rallied and we created a small little fair value gap there. The market drops down into that before taking out the relative equal highs, buy side liquidity, and or returning back to a premium sell side imbalance, buy side efficiency, or fair value gap that would be above the market here and here. So if it's going to rally here, the framework could be on the optimal trade entry here and taking the first fair value gap that forms inside.
It's a beautiful setup right here. I wonder if I caught this one.
2 o'clock and 3 o'clock. That's happening right there.
In
so
May
from
10th.
Here, all the way up to here, does that offer 10 handles? Yes, it's actually offering 12 or more. So this entry here is a high probability condition that lends well to a run into inefficiency in the premium and to take buy side out as well. So that is a very handsome run there and trading between 2 o'clock and 3 o'clock. Now some closing thoughts. If you're new to my channel and you're seeing this, you don't have enough to trade this pattern. So you have to back test it while you're learning how to read price
Exactly.
action
And paper trade it too. Very
where
important.
the next draw on liquidity is going to be for the next price swing for whatever asset class you're trading. So don't be discouraged if it seems like it's this cherry picked and there it is, because I actually traded many of these types of setups either with calling it out on Twitter or mentioning it in passing while actually doing executions and recording it.
Lost the quality there.
These patterns, these things form, and I called a few of them real time on Twitter last week, and many of you, much to my disapproval, because I don't like when you take the setups at a trade setup signal. I don't want to.
Honestly, I did learn a good bit from ICT being active on Twitter, but at the same time, I didn't really, this isn't a bad thing. Like, we all have our different styles and ways of teaching and whatnot. It worked for him, made him happy, so be it. But in my personal opinion, I just didn't really like how he conducted himself on Twitter. Whenever he was trying to call levels out, he'd say, I'm not even going to get into it, but yeah, there's that.
Like that. But many of the followers on my Twitter feed actually showed they took the trade I called out with using a silver bullet. So the pattern works. It's highly, highly consistent. It's extremely high probability when you have all these factors in mind, and they are present in price action. It gives you a rule-based idea to look for a time-based model. So time and price is being
time and then price.
The focus of
time
my
comes first.
Analysis concepts and teaching as a mentor, teaching my students how to find something that repeats. You can't get anything better than having a specific 60-minute window of opportunity that forms every single trading day. Every single trading day, one of these setups are going to form. Now, if you don't have a plethora of markets to follow, ideally one or two, that's why you're first learning how to do it. Even if you grow to a point of interest where you have a lot of markets that you're trading, a lot of pairs or a lot of futures markets and such, you'll find that over time, the longer your career will be, your list will reduce down to one or two, at worst, maybe three if you want to be a deviant. But my advice is for you to be a specialist. Try to focus on one market, because if you can do that,
very powerful.
One of these,
all you need is one market.
Silver bullet setups will form every single day. Meaning that if you just follow one market, just one market, you can get your setups there. You can make your bread and butter. You can make your ends meet.
NASDAQ and ES, only thing I trade.
It's going to happen, but by far and large, you can do things with one market. And if you don't get the setup in London, you wait for it in the AM session. If you don't get it there, you wait for it in the PM session. But every single market, every single trading day will offer one of these. So you have to be disciplined. You have to focus.
Now, don't take this out of context and think that you should be trading every single day, because not every single day needs to be a trading day, okay? You can literally find one good setup per week with multiple contracts, and you're good. That's all you'll ever need.
look for these ideas that form in price action. And should you do that, you'll need to look at nothing further than this. You don't need to go into any other models. You don't need to go into any other teachings. You
Exactly.
don't have to come
Keep
back
it
to my
simple.
YouTube
You only
channel.
need one
You'll never
model.
have to do any of that stuff anymore because you'll be independently minded and your analysis will be uniquely yours. You won't have to look at external sources like me or someone else to provide that to you. You'll trust yourself, which is a very empowering state of mind. And that's always been my target and goal with all of my students. So hopefully you found this one insightful, and I'll talk to you next time. Be safe.